Okay, good morning, class. This our lecture. We are still on the chapter 1 of financial accounting. Now we are going to look at the need for financial statement. Why do we need financial statement? Why prepare financial statement? This is what we are going to look at in this our video. The objective of a financial report is to provide financial information about the reporting entity that is useful to existing and potential investors and other stakeholders. Most users cannot insist that businesses supply them with specific information. Instead, they have to rely on the financial statement produced by the business for much of the financial information they need. And that is one of the objectives of this financial statement. Is majorly for users of the financial statement. Who are now the users of this financial statement, and why do they need this information? We are going to look at the users of this financial statement. We have internal users and external users. Users of financial statement. As I said, we have internal and external users. Who are internal users of this financial statement, and also who are external users of the financial statement? The internal users of this financial statement, the stakeholders that are within that entity or business. Let's say the owners of that business, managers, employees, all these, they are all internal users of the financial statement. Then the external users of the financial statement, we have governments, have potential investors, have financial analysts. So these are some of the users of the financial statement, and we are now going to look at them and explain why do they need this financial statement, and believe that we just pick some. We cannot cover everything here, but just want us to look at some users of this financial statement. First, let's start with we have investors. They have investors. Investors in a business entity are the providers of risk capital, unless they are managers as well as owners. They invest in order to obtain financial return on their investment, and they need information that will help them to make investment decisions. In the case of shareholders in a company, this decision involve whether to buy, hold, sell shares in that company, because before they make any decision concerning this buy, hold, or sell share, they have to read and use that financial statement in order to make informed decision concerning these three things. And the decision might be on an analysis of the past financial performance of the company and its financial position, and also predicts from the past what might happen to that company in the future, because you can only use the past performance of that company, that is financial record of that company, to predict what will happen in the future. And whatever your decision is, that is when you will now know, okay, am I going to buy this share or I should hold on, or am I going to sell the shares I'm having in this company? So the financial statements also give some indication of the ability of the company to pay dividend to its shareholders out of the profits, because the shareholders can only receive dividend if that business make any profits. Out. If there is no profit, they cannot have dividend, and the shareholders, that is the investors, they can now make their decision whether to continue with that business or not. The next one we have lenders. These lenders are like say banks. Banks are interested in financial information about businesses that borrow from them. Financial statement can help lenders to assess the ability of the borrower to pay interest and its ability to repay the loan. This situation is, even before they give loan to any business, they have to assess, they have to analyze the financial statement of that entity, their ability to pay the interest plus the loan. If that business, according to the financial record of that business, will be able to pay that, then the lenders will go ahead and give that money. Then the next one we have suppliers and other creditors. Financial information about an entity is also useful for suppliers who provide goods on credit to a business, and other trade creditors who are yet to be paid by that entity as a result of debt incurred in the business operation. We have governments. The governments and their agencies are interested in the financial statement of business entity. They might use this information for the purpose of business regulation or deciding taxation policy. So these are some of the. Let's look at employees. The employees need information about the financial stability and profitability of their employer. An assessment of profitability can help employees to reach a view on the ability of the employer to pay higher salary, provide more job opportunities in the future. And some of these, the employees will use this information to decide on whether to stay in that company or to leave due to job security. Because in a situation whereby the company is always running at loss, so there is serious problem concerning their job. So the employee will now decide on whether to stay or not. And we have customers. Customers might be interested in the financial strength of an entity, especially if they rely on that entity for long-term supply of key goods or services. In a situation whereby customers they rely on the single company process of supplying their goods or rendering of services, and they are not looking at the financial record of that company, that particular customer is in serious problem. He has to check the financial health of that business in order to know how to strategize. And in some cases, some companies they will now say, okay, you have to pay before I deliver goods to you. In a situation whereby customer now make deposit of certain products, and at the end of the day he is not getting that product, and his customers too are there waiting for him to supply, what will now happen to him? So you see there is a serious problem which customers too need to look into the financial statement of the company they are buying goods from. That is. Then the next one we have managers. Managers are not included in the list of users by the IASB, which is International Accounting Standard Board framework, because management should have access to all the financial information they need, and in much more details than the financial statement provide. However, management is responsible for producing the financial statement and might be interested in the information they contain. So, but they still use the financial statement because they are the one preparing this financial statement and they have the details of everything. So they also need the financial statement of a business. Well, thank you very much, and this is where we are going to stop. And you can go and look for others. There are so many others stakeholders of or users of financial statement. In the next video, we are going to look at the component of this financial statement. Thank you.